And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show. Over the next hour, we unfold your map to financial freedom. You'll learn how to retire through investing in single-family and multifamily real estate. You'll learn how to create cash flow and build wealth so you can have the time and money to live the lifestyle you want.
Welcome to the Real Estate Investor Radio Show. I'm Mike Harrison, and as always, we're working on your financial freedom. Typically, I do this show to provide reasons to invest in real estate, why you should invest in real estate, why real estate makes sense, why it is the best investment out there, why 70% of all millionaires in the United States are millionaires because of real estate. Talk about strategies, mindset, philosophy, a lot of counterintuitive insights. You see, we see things much different as real estate investors. But today I'm going to do the opposite. We're going to review why the majority of people just will never invest in real estate. And that's the truth. When you think about, and I'm not talking about institutional investors, big companies that purchase industrial and commercial properties. I'm talking about individuals. You have one person that invests in the stock market, mutual funds, bonds, and you have that other person that says, I'm going to take a different route. I think I'm going to invest in real estate. And I don't know if that number is 10% of the people invest in real estate. I don't think it's that high, just in my inner circle, not my Lifestyles Unlimited circle. We all invest in real estate. That's a tight group. I'm talking about outside of that, my close comrades, people I grew up with, my neighbors, my family, that sort of thing. When I look at that, I'm the only one. So if we magnify that across the United States, I would say that as far as individual investing goes, it's much less than 10%. Again, I don't know the number. I'm sure I can look it up out there, but that gets me thinking, why? Why will most people never invest in real estate? So I've crafted an entire show around that, and maybe we get to all the reasons today, and if we don't, I'll carry it over tomorrow. I'm not sure. We're just going to have to dig in and see how this goes. Now, a little bit of background. When I first started investing in real estate, on that micro level, it was very slow at first. It was very slow. However, within 6 years, I made more money investing in real estate. Not all of it realized, okay? You got to see it different. The money comes in different forms and in different ways. The timing is different. We're going to talk a lot about that today. But within 6 short years, what I had accomplished financially was greater than what I had accomplished financially in 25 years. 6 years versus 25. Now, what was I doing during those 25 years? I was doing what I was taught to do. I was taught to save money, try to do everything I can to put 20% in that 401k, and I often succeeded at that. I also had an IRA, so I had both the 401k and the IRA. I would even buy the occasional mutual fund that wasn't associated with either an IRA or a 401k. I was always looking to invest. But when I purchased that first rental property, okay, 2013, what did I accomplish at the end of 2013? It really didn't pop. Well, what I'd accomplished was I'd added an additional, and it was more than $500 a month. I believe that first property cash flowed, I don't know, let's call it $535 if we got to put a number on it. So 2013, at the end of December of 2013, I had added an additional $535 in cash flow to my bottom line monthly. Big deal, right? That's when I say it started slow. It didn't pop. And then it was $500 on the next property, $500 on the next. Properties today are more around the $400 on average range, some less, some a little more. But my initial properties were definitely over $500 a month in that cash flow. However, I didn't realize exactly what was happening in the background, the magnitude of what that investment was really doing. My wealth was growing much greater than just that $535 a month. It was almost as if I had turned on some kind of machine, okay? Got this machine, we get it plugged in, and we start it, and here's $500 tax-free this month, and then here's $1,000, and then here's $1,500 a month, and it's growing, and you're kind of seeing it on that scale. And then all of a sudden, 7 years later, here's $250,000, no exaggeration. And at the time, I mean, I knew we made money 5 ways in real estate. You know it, but you don't know it. I'm not an accountant. I'm not an engineer. And I know you accountants and engineers right now are laughing at me, but that's just my personality. I know all this is going on in the background. I wasn't necessarily tracking it as tight as it could be tracked. I knew it was going to happen one day, right? I went to Lifestyles Unlimited. I was educated. I had taken the 2-day financial freedom seminar several times, but the magnitude of what's really happening isn't that $535 a month or that $1,000 a month or $1,500, or eventually I had 11 properties and they were all cash flowing very nice. So the cash flow was substantial, but the real wealth growth was on that backside. It was the magnitude of everything that was coming in all these different ways. I'll give you an example. Just last week, I got a notification from one of our lead investors, okay? It was a property that was sold in May, and we got paid out, I believe, late June. Here's the return of your investment. Here's the profit on your investment. And the deal closed. And I knew there was still a little tidbit of money that was going to come to me. Just a little dash, just a little scooch, right? And that's because they're rectifying the insurance and the taxes and all that. Well, I got the notice the other day of how much was coming, and it was 5 figures. The check was 5 figures. I mean, it was 3 times as much as I spent on my first car. So I'm telling you, when money comes in, the magnitude of it, it's life-changing. I'm Mike Harrison. If you have any questions for me, questions about Lifestyles Unlimited, questions about real estate investing, you want to talk about some of these reasons that I'm throwing out there why you'll never invest in real estate, please send me an email. I do respond personally to each and every email I get. My email address is askmike@luinc.com. askmike@luinc.com. You know, there's 4 ways you can digest the Lifestyles Unlimited real estate content. 4 different ways. 1, we have our own YouTube channel. You can go to YouTube, type in Lifestyles Unlimited, type in Del Walmsley, type in Mike Harrison. You'll find all kinds of content on that YouTube channel, not just the podcast, not just this broadcast on this radio station, but a ton of content, case studies. You'll see when we walk single-family properties, multifamily properties, just a ton of content there. As always, the Lifestyles Unlimited website, lifestylesunlimited.com. Podcast, that's my favorite way because it automatically uploads. I just subscribe to the Lifestyles Unlimited Real Estate Investor Radio Show on my favorite podcast app. It uploads. I can listen to it in my free time. But there's a 4th way. Let's say you know that the Lifestyles Unlimited show is on your favorite radio station at a certain time, and you're out of town. You can't catch that radio station. Or better yet, you're on a beach in Cancun, and you know that, hey, in 20 minutes, my favorite radio show is about to be live. Why don't you just, as long as you have internet access, you've got a smartphone, just go to that radio station's website, and you can live stream the show there. So there's 4 ways to consume this real estate investor content that we have. Now, today's show, those of you that are real estate investors, I'm proud of you. I'm one of you too, and we're doing the right thing. I'm convinced of it because it has changed my life, and I know it's changing your life. Now, the bottom line, most people, individuals listening right now, will never embark on this wonderful journey. They will not invest in real estate. Now, I'm not talking about somebody that they are a stock market investor, and they're like, oh, Harrison, what are you talking about? 15% of my portfolio is in REITs, real estate investment trust. No, that's not what I'm talking about. I'm talking about an individual purchasing a single-family rental property, participating in a multifamily passive investment, a syndication, possibly owning their own small apartment community, a 5-unit, an 8-unit, a 12-unit. And I met a lady the other day. She has an 18-unit in Dallas. That's what I'm talking about. Maybe a lead investor. The majority of people in this country just won't do it. And we're going to get to those reasons. Now, those of you listening to me now, and you are a real estate investor, whether you have one house or 20 houses, one passive investment or 50 passive investments, I promise you'll get a chuckle or two on this show, because what's going to happen is you're going to see yourself. You're going to see yourself at that critical moment in time when on one side of your brain is saying, don't do this, don't invest in real estate because of blah, 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 blah. And the other side of you is saying, no, I need to make a change in my life, and this is when I'm going to do it. And you overcame that excuse. We're going to hit that excuse today. I hope you can stick with me. If we don't hit it today, I'm going to continue this show tomorrow. There's a ton of content, so you'll hear that. Now, for those of you that have never invested in real estate, you don't own a rental property, you're not an investor in an apartment community, I want you to listen up, because I'm going to hit your hot button today. I'm going to hit the reason why you're not acting and investing in real estate and growing wealth and creating passive income. I promise I'll hit it. If I don't hit it, send me an email. I'd like to hear what your excuse is. When I started writing this show, when I sat down and took pen to paper and said, here's what I'm going to talk about, I identified 16 different reasons. 16. And I'm sure there's a ton more. We only have 1 hour to do this show, so that's why I know I'm going to have to carry it over tomorrow. Now, in no particular order, here we go. Number one, why you will never invest in real estate is because you have a great job that you love and you make very nice W-2 income. And you feel that if you invest in real estate, you are threatening that W-2 income. Wrong. This is a strong excuse for many people out there. They say, Harrison, I make great money. Why should I deal with it? And what I would say is several things to this. One, what makes a nice salary even better? Well, that's passive income that you're making in your sleep. But also, I would like to say this. Most of you are in corporate America. Corporate America loves you until the minute they don't. Be prepared. Things can change overnight. Economies can change in just a few short months. We're going through that right now. Things can change. And so maybe you call this insurance. Whether you like it or not, if you don't want to get involved, be a passive investor. Here's another thought. You can hedge your 401k bets. If you have a great job and you're making great W-2 income, chances are you're feeding that 401k. If you're like me, that's what I was doing. That's what my friends are doing. That's what my neighbors are doing. That's what my family's doing. You can hedge that 401k bet, essentially, and it is a bet because you're putting all that hard work and income into this stock market because that's what you were taught to do, and you're feeding that because one day, quote unquote, you want to retire. What's a better way to hedge that bet? Well, some single family properties is one way. Maybe 10, 15 passive investments in some apartment communities is another way. So keep that in mind. I'll tell you this, for you high income earners, and we hit it in the first segment of the show if you missed it, you don't see what's really going on in the background. When you go through the education and the process and you put the money down to buy a single family property, in your mind, you're saying, boy, that seems like a lot of work and a lot of justification just to make $500 per month. And that's not moving the needle for you. So I get it. I understand that side of it. I will tell you, go back and listen to my first segment. There's so much more going on than just that $500 per house. I mean, it's going to grow. It's growing in all these different ways. Eventually, you're going to sell that property or refinance that property, and you're going to have a nice bit of cash to, again, my advice, reinvest, grow that passive income. Now, for you high W-2 income earners, what else is going on? You have a $300,000 or a $200,000 per year lifestyle, right? You're making great money. You're living a great life. You'll take great vacations. Maybe you got a second home, the lake house. You probably have a boat. You're doing well right now because you have that high corporate income. So let's say you have a $200,000 lifestyle or a $300,000 per year lifestyle. How much are you going to have to, quote unquote, save in your W-2? How much are you going to have to save out of your W-2 income into a 401k to continue that lifestyle? Well, they tell you can pull 4% a year. So if you have that $300,000 per year lifestyle, you better be able to save $8 million in that 401k to even have a chance of continuing that lifestyle. Now, you've been taught and you've been trained that, no, when we retire, we spend less and we live life much differently and we have a lower tax bracket. You're not going to do that. If you're living like this now, if you're living high on the hog now, you high W-2 income earners, you're not going to take a back seat to that when you're older. No, that's when you're really going to say, I don't have that job. I want to travel. I want to spend more time at the lake house. I want to do more things with my family. I want to go see my grandkids. You're going to be spending more when you retire. So the high W-2 income earner, it just doesn't move the needle for you. I'm telling you, there's so much more to it. You need to take a hard look at it. My name is Mike Harrison. We'll continue why you'll never invest in real estate.
Got questions? Call Lifestyles Unlimited at 855-497-4335. The Real Estate Investor Radio Show continues next.
Del Walmsley's Real Estate Investing Worst Case Scenario.
Let's say the Democrats took away all tax deductions away from real estate like Ronald Reagan did in 1986. In 1986, we had stock market crash, a real estate value crash. The world came to an end for 3 months. Why? Because he took the value away from owning real estate for people who used it as a tax break. People like myself who got started at 87 go, you know, you can really buy this stuff cheap right now. In fact, I can buy it so cheap, I can rent it and make a 20% return. Cap rates were 20%. I buy a building and I made 20% of my money without leverage. If I put leverage on it, I made 30 or 40% return. Ungodly returns. Right now, you can earn less than 1% on a savings account. So do you think I hope that happens again? Yes, I do. In 2008, when the world crashed and cratered, I bought real estate 50 cents on the dollar. I said, well, what happened to the stuff you already owned? I kept it. It stayed full. We rented it. We made money.
Don't let the fear of losing money hold you back from making money. Join us for the next live online free workshop. Register at lifestylesunlimitedworkshop.com.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. I'm Mike Harrison, and as always, we're working on your financial freedom, and we're working on it today because I'm telling you why the majority of people out there will never invest in real estate. I'm talking about individual investors buying properties, participating in multi-family investments. I'm not talking about institutional buying stock in a REIT or shares within a REIT. I'm talking about getting involved on a personal ground level platform. When I started learning what Lifestyles Unlimited teaches, when I first went and took a look at it, now I owned a rental property prior to it, okay? Joined Lifestyles Unlimited. Actually came to Lifestyles Unlimited prior to joining just to become more effective. I knew I had, what's the saying, the tiger by the tail. I got something here. I just don't know if I can handle it or if I can tame it. And there's got to be more to this. And boy, is there more to it. It was amazing what I was able to learn, the techniques, the strategies. I didn't even know there was other ways to make money in real estate. And that's kind of what I'm talking about here is, in fact, my last excuse why people will never invest in real estate is because they're making great money. They've got a great gig and they're making huge money, whether they own a business or whether they're in corporate America and they're getting paid well. So that $500 a month just doesn't move the needle for them, just getting the process started. Because there's a lot you have to do prior to buying that first rental property. And then it's just rinse, repeat, rinse, repeat, rinse, repeat, boom, 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 go, go, go. But I realized when I came to Lifestyles Unlimited, and if you don't know who Lifestyles Unlimited is, we're a real estate mentoring and educational platform. We teach people how to effectively, boy, do we teach people how to effectively invest in real estate. It's unbelievable what a game changer it is. But I realized the way to look at the world with that millionaire's mentality, not that worker saver mentality. And I was a saver. Now, some of you will disagree and go, Harrison, investing in a 401k and an IRA, that's not saving, that's investing. Okay, friends, that's a different show for a different day. I've got it out there. You can go look it up on the website. That's saving. How much did your 401k pay you last month? What do you mean? We don't get that until we're 65 or 70 or whatever. And by the way, whatever you got in your 401k right now, 40% of that's going to Uncle Sam. So don't be looking at that and throwing your shoulders back and standing up tall. I mean, 40% of that belongs to the man. 60% of it belongs to you. But Lifestyles Unlimited changed my life. In 6 years, 6 short years, I grew my wealth 3 times greater than I had using the conventional wisdom plan the previous 25 years. And I had a good corporate gig, and I at times had excellent W-2 income. I'm not bragging. I'm just saying I changed course corrected, and took this real estate investing path. And as the poem says, it made all the difference in the world. Now, reason number 2, these are not in order. Reason number 2, why you'll never invest in real estate. I think this one is my favorite. And it goes something like this. It's because your neighbor's cousin's friend's ex-wife's coworker said, I had a bad experience in real estate, and the residents trashed the property, and I never got paid. And come on, man. People love to tell you whatever horror story happened to their cousin's friend's brother's neighbor, on and on. It's amazing the legs these stories have. I guess it's human mentality. Bad news travels like wildfire. Good news really doesn't travel far at all, especially if somebody's humble. You might not know about it. But I would ask you this. Next time that person comes up and says, hey, you're investing in real estate, don't do it, or I advise not to do it because of blah, 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 I would say, is that person a real estate millionaire? Yes or no? Are they a millionaire at all? Maybe they are a multi-millionaire and have earned it and built it up the old-fashioned way. Listen to them a little bit. But if they're not in tune with real estate, I think that person's smart enough to go, hey, Harrison, I don't know a lot about real estate. Have you considered this? And that's when you come back and go, well, actually I have, because I'm educated in that regard, and this is how we handle that situation. Okay. Now, my father, right here, this is how close at home it was. My father was the 20th century man, right? The 20th century. He had a great job. He worked hard. He got a pension. He got health care for life. And what did he invest in? He was a big CD and long bond guy. He loved the long bond. Now, my father was not rich. He was comfortable. Great guy. I'm not throwing darts at my dad by any reason, but all he knew was his personal truth, and that was 20th century truth of years of 8%, 12%, or higher interest rates. Look, if interest rates goes to 12% and you can buy a CD and put $1 million in that and make $120,000 a year with very little risk, well, that's something I might consider, honestly. I don't want to put it in there for a long time. I'm making more in real estate. I said I might consider it. I haven't reached my real estate goals by any means, but today you're getting 0.5%, if that, maybe 1%, long bonds. It just doesn't make any sense, and you still have to pay tax on that money. But that was my father. My father's like, son, you should really take a long look at these bonds. And the world had changed, okay? The world had changed. What's happening today is going to be different 50 years from now, which is another great aspect of real estate investing, because within our tight little group, our networking group, we adjust, we adapt, we share best practices. We're constantly networking. What are you doing in this situation? How are we overcoming that situation? And so we're able to adapt quickly, right? Adapt and overcome. And so that is a great part of being in an investment group. But the fact that somebody's friend's cousin had a bad real estate experience should, A, not be a deterrent to you. B, it's just gossip. C, be sure that you're educated. And then ask yourself, again, are they real estate millionaires? What other advice do you take from this person, right? If they're just you're out with some friends and somebody tells you that, you don't know this person from Adam, but they're stepping over themselves to tell you the bad real estate story. Are you taking other advice from them? Probably not. And again, there is a group of people. Beware of this. I think envy is the worst human emotion out there. Jealousy is, I want what you have. Envy is, I don't want you to have nice things because I don't have nice things. And it's really hateful. Are there people out there that are like that? Yes, and some of them are very close to us. There is an element within society that doesn't want people close to them to go on and be successful. I don't understand it. I'm happy when people are successful. I love it when people get ahead. Nothing thrills me more than to hear the rags to riches story about somebody. Good for them. But there is a group of people that when they see you start getting ahead and you're getting ahead and that passive income's coming in and it's growing and it's growing and it's growing, there's just a group of people that are resentful. They're always going to be like that. So be careful and don't be affected by someone else's bad story. Now, third reason. Fear. What does fear mean? You hear a lot of people saying false evidence appearing real. My favorite one is fear means FEAR, right? Forget everything and run. But that might be the number one reason out there for people, because what is fear? Fear is the unknown. Would you drive, let's say you had a map and it went to a city and it well-traveled, and then from the city into the hinterland, there is roads, but you don't know anyone who's been in there. You don't know anything about the place. Not many people, you've never met someone that's been there. Would you be that first person to venture into the unknown? And let's say you went there and it was no big deal, and you drew a map and you said, here's what I did, here's what I learned, and you sent it back. But you just eliminated the fear for everybody else. And it is the lifestyle you always wanted. It will change quickly. It's unbelievable the magnitude that real estate investing done properly can have on you in a very, very short amount of time. I'm Mike Harrison, filling in for the great Al Gordon. I'm sharing today my top reasons why you'll never invest in real estate, because we know it, right? Most people just won't do it. In fact, when you talk to friends, family, neighbors, and they realize you're a real estate investor, they offer a few tidbits, but they're thinking in the back of their mind, no, I'm not going down that path. And I've got so many of these excuses. When I sat down to write the show, I literally came up with 16 of them. I'm on excuse number 3, or reason number 3. Maybe excuse is too hard of a word. So we're going to do a 2-part. We're going to come back tomorrow and continue this show. So I hope you can pick me up same time, same place. Tomorrow we'll continue these reasons why you'll never do it. Now, before I get to continuing the reason, take a moment. February 15th through February 18th, 2023, Irving, Texas, the Wealth and Passive Income Expo and Masters Tour. Save the date, friend. Save the date. 6,000 like-minded real estate investors will travel to Irving, Texas from all over the country. I've got friends in so many different states. They're going to come down. It's great seeing them again. What is this? Well, we have breakout classes. We have sessions where you can come learn more about every aspect of real estate investing, down to a T. I think there's 36 different breakout sessions, so you can kind of pick and choose over that 3-day period what you want to see. The Masters Tour, that gives you the ability to get on a bus, physically go visit 4 different apartment communities, meet that lead investor or syndicator, as they're called, outside of Lifestyles Unlimited, learn about the investment, learn what the returns are, learn how they took this apartment community and made it a clean and functional place to live and just made it a great business. But many of you will never do that. Why? Well, fear. You're afraid. We left off on fear in the last segment, and you just don't understand the process or how it works. You've been told tenants, taxes, and toilets, and nothing could be further from the truth when this is done correctly. But what is fear? Fear, really, it's about the unknown. Our parents tell us what they know and learned along the way. Fear is about not wanting to leave your comfort zone. And I'll tell you, if you want to succeed, you need to get out of your comfort zone. Fear is about trying something new. But let me tell you, there's thousands of us that are doing this. We're here to help you. Even I run into situations where I have to pick up the phone, and I texted my buddy Andy Webb, who also does this radio show, the other day. Hey, what do you do in this situation? So there's so many of us that are here to help you out in that regard. So there's nothing to be afraid of if you're educated. Now, if you're just doing it on your own, like I did, I was like, I got to try something. I didn't even know Lifestyles Unlimited was out there. I bought that first rental property and I winged it. I made decisions that I thought were the best decisions at that time. I didn't fail. I still made money in real estate. It was still an adventure, let me tell you, and my wife will really tell you that. But once we learned how to do it correctly, it's not that big of a deal. It's a rinse and repeat, rinse and repeat. It gets easier as you go. Now, I'll also say this. If you're afraid, those of you that are afraid of investing in real estate right now are having a portion of your W-2 income pulled out and put in the stock market. And you want to talk to me about fear? I would be afraid to be putting my money in the stock market. That thing is so inflated. Anytime there's inflation, that means the dollars are worth less. And so you patting yourself on the back when the stock market goes up. Oh, it's going up. The value is the same. It's not changing. It's going up with inflation. So think about that. And then you have these corrections, right? And downturns. I went through 2 of them. Stock market investing scares the you-know-what out of me. Real estate investing, that gets me excited. All right, reason number 4. The old, wah, I don't have the time. Wrong. You've got the time, okay? We use very little of our time. When I had 11, I use even less time today, but when I had 11 single-family properties, I spent literally about an hour a month on those properties. I had a management company. I wasn't managing them myself, okay? You can do it both ways. I have managed property myself. And then once I got to a certain point, I turned it over to a management company. We can talk about that. If you've got questions about it, send me an email, askmike@luinc.com. But honestly, when you fix everything in the property, and that's what we advise, and you put a great resident in there, and you screen the heck out of that resident, you get the best person in the best product for the best price, you're not going to use a lot of time. It's set up. It's running. The rent is getting paid. Now, if you skip that screening step and you've got some crazy in there or 4 or 5 crazies in there, yeah, you're going to have a lot of headaches. You're going to spend a lot of time. But I spent about an hour and a half each and every month. I did it every 3rd Saturday morning. It was routine for me. And literally about from 9 to about 10:30. And really all I was doing was balancing the books, checking off where the rent had come in, just updating my spreadsheets, writing the checks for the mortgage company, although we didn't write checks, but I paid online, right? You know what I'm saying. Rectified the bills that need to be paid, the insurance that needs to be paid. If I had a handyman or somebody do some work, make sure that's all rectified. I did that every 3rd Saturday morning. I spent about 90 minutes on it. Passive investors, we spend no time on our properties. None. Literally, we evaluate a private placement memorandum. If we like the lead investor, if we like the strategy of the lead investor, if we feel the lead investor has the knowledge and ability to run and perform this business, then we write a check to that lead investor. Again, you really don't write a check. You're wiring it, but you know what I'm saying. We send them the money, and then now you're a partner in the deal, and then really, you do nothing. You read your monthly report on how the property's doing and collect some income quarterly. That's it. So passive, if you really don't have the time, then you're perfect for passive investing. Lead investor, different story. If you want to be a lead investor, that's a full-time job. I'm not talking about that here. I'm talking about you that don't invest, that will not invest in real estate. Now, rehab. A lot of you that, again, you're uneducated and you think that we're going in and we're painting and we're putting in the new flooring and installing the new appliances and doing the landscaping. No, and no. We pick up the phone or we send an email and we have people that do that for us. So, again, we're not spending any time on that. Flippers. We are not house flippers. That's a job. That's a different show somewhere else. That's not the Lifestyles Unlimited Real Estate Investor radio show. We are a buy, a hold, a rehab, a repair, and then put a great resident in there and then hold that property for a couple of years until it makes sense to either refinance it or sell that property and then go buy some more properties. But essentially, we're hiring professionals to do the work for us, real estate agents, contractors, whoever needs to be out there. Now, last week I did spend 30 minutes at Lowe's buying an oven and a dishwasher for a property. So when I say we don't spend time, look, there it was, 30 minutes. I was driving by, popped in, got a stainless dishwasher, got a stainless stove. It was time to upgrade a property. that I'm doing, and they're delivering it and they're installing it. Time? No time. That's not an excuse for you. Number 5, this one's big. I can talk about this one for 30 minutes. You don't want to borrow money because you've been trained that borrowing money is bad, that debt is bad. And there's another radio show out there that says if you're going to buy a rental property, you need to pay cash. Look, this was big for me when I started investing in real estate, that don't want to borrow mentality, because again, I had been ingrained. The way you get ahead is you save, you pay cash, you're not carrying any balances. And I agree that consumer debt is bad debt. Consumer debt is bad debt. Credit card debt, all that stuff, college loans, any sort of thing. Asset debt is completely different, okay? But that other radio show that says you need to save up and pay cash for a rental property, my question is are you 5 years old? Leverage the property. You're an adult. Life is about debt management. Getting ahead is about debt management. You get rich by borrowing, not by saving. And when you put leverage on every real estate deal, you are increasing the returns significantly. Think about every big sort of purchase where a wealthy person is structuring a deal. Are they paying cash for that deal? Absolutely not. Absolutely not. They are leveraging the deal every time. This is how you get ahead. If you're tying your money up in cash on all these assets, your returns go way down. And if you got questions about that, send me an email. Ask Mike at luinc.com. Ask Mike at luinc.com. I worked for a gentleman a number of years ago, great guy. He was a billionaire, okay? He was a large distributor, and he had 300-400 locations all over the country. Do you think he paid off that real estate? No, he made more on his real estate. He leveraged those. He liked to keep maybe 10% equity, maybe, oftentimes less. He had pretty much a guaranteed resident. That was his company, was renting the building from himself, essentially his real estate side. And he's a billionaire because of it. So real estate makes millionaires, and it can make you much, much more than that. We're going to continue tomorrow with reasons why you'll never invest in real estate. I want you to remember, it's not the money, it's the lifestyle. My name's Mike Harrison.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.